Hey everybody, welcome to the Norris Group Radio Show. Today we are here with Nema Daghbandan. He is a partner with Geraci LLP. His practice encompasses all facets of real estate, including transactions, and he primarily represents lenders, brokers, and loan servicers. I met him through, I believe it was AAPL, or the, what's that stand for? The American Association of Private Lenders. And he and I were on a webinar, if you will, covering AB 1771, which we're going to talk about today. His practice revolves around the preparation of documents and providing compliance advice for mortgage professionals nationwide. And this is not the first rodeo show that Nema has been involved in when it comes to helping investors and private lenders stay clear of some legislation coming our way. So Nema, thank you for joining us. This is such an important topic. And I think what we're going to do, this is a little visual for those who are for YouTube. There are going to be slides I'm going to give Nema. So he's going to walk through the presentation, outlining basically the presentation. So Nema, how do I hand this to you?
I think I can just try sharing screen from my end and seeing if that works.
Okay. Yep.
How's that working for you?
It says it started screen. There we go. Okay, let's do it.
All right, perfect. And feel free, Aaron, at any time, feel free to stop me here. Very nice to meet with your audience here today. Very thankful for everyone that is on here. It's an interesting thing. I think people oftentimes, whenever legislation comes up, people oftentimes think that the most powerful tool for legislation or combating legislation is lobbyists. As a person who has been involved with this for a few different instances, I don't think it's a good way to counteract proposed legislation. And what I mean by that is nothing moves politicians more than ringing phones. And so we have always tried to take an approach of when there is legislation that's going to affect one or more industries, the participants who will be affected, if they can cohesively tell their stories and they can talk to their legislators. Legislators are very interested to hear how this actually impacts, because they have very good intentions. They're trying their hardest. They're in there trying to solve a problem. They think this solves the problem, but they don't actually know necessarily. And particularly when you get to the technical side of how the legislation is written, they don't know the consequences. They're not lawyers. They're not they're not in the industry themselves, right? They're a person who's going to talk about California real estate in one day and then move on to health insurance the next, right? And have to speak with the same amount of passion on both issues, even though they know very little about either, right? So that's for those who are sitting on the sidelines of these issues and thinking your voice doesn't count or doesn't matter, I cannot tell you from personal experience, I've seen it change hearts and minds in real time, and there's nothing that happens like mobility and advocacy. And so there's lots of ways you can participate. And the nice thing about this bill is it's written so terribly that it affects everyone in California. So you don't need to be a private lender. You don't need to be a realtor. You don't need, if you own a home or might want to own one in the future in California, this affects you. So without further ado, let's get into it. So actually, what is this thing called? It's called the California Housing Speculation Act. What a novel name for it. What does this thing do? So effectively is the bill as proposed would create up to a 25% California capital gain tax, in addition to any kind of income tax or any other tax, any sort of federal capital gains tax, any tax whatsoever. It's just an additional tax that would occur if you sold or exchanged a property in less than 7 years. It's a sliding scale, but if you sold it in less than 3 years, it would be 25%. So that is what this tax is. And what would they do with this money? They're going to create what is known as a speculation recapture community reinvestment fund. Tell you all about that in a second. It's probably one of the weirder things of this bill as written. So, all right. Why do this? Why are they proposing to tax 25% on the sale of the property? So they're citing research done by California Association of Realtors. Funny enough, we just signed off on a large letter with them. They are the lead advocates in the trying to defeat this bill. And they will even say as well, that's actually not what we said in our data point, but nonetheless, there's a data point that exists, and they're classifying this bucket of people who they're calling investors, but they don't actually say what an investor is. Is it an all-cash buyer? Is it an iBuyer? Is it a, is it a wholesale purchase? Like, no one's really defining this term, but they're saying is in California, from our data, in the third quarter of last year, 51% of the buyers in California were investors, and the national average at that time was 19%. Aaron and I have talked about that a little bit, and he's like, that's probably closer to about 19% in California if you actually look through the data, but that's not where we're at. So, and the key in this is the legislators being yelled at by the constituents. I can't buy a house. I'm always getting outbid. It's impossible to get properties in California. You must do something, and the prices are skyrocketing through the roof. You have to do something to help, right? That's what is really driving any sort of push, right? And there's belief that these investors are actually raising prices in terms of the actual purchase price as well, versus a person buying their primary residence. So we talked about it earlier. There's a sliding scale. It's somewhere between as low as 5% up to 25% based on how long you've held the asset, right? So in the first 3 years, it's that 25%, down 5% basically every year thereafter. 7 years, no additional new tax. And also, I'll pop back on it. It's net capital gains. So for those who buy a property, have carrying costs, fix and flip, those sorts of things, it's based on the net capital gain, not on just sale price less sale price or less purchase price. So what property? This is one of the more interesting things about this bill. You would think that what they're really trying to do is help people buy their first home, right? Noble cause, great. But in actual application, any residential asset. So could be a multifamily, could be a single family, could be a duplex. They don't care. Any sort of residential property would qualify for this new tax. So let's talk about a few exceptions. Now you can kind of start seeing what I would say is a little bit of pragmatism being applied, and where they're kind of thinking through this a little bit, but still missing a lot of key concepts. The first here is that California has been, as you know, kind of heavily promoting affordable housing and trying to find ways to create affordable housing, right? Aaron's, an ADU expert and knows a lot about kind of the promotion of creation of ADUs, or really creation of additional inventory, which is great. Makes a lot of sense and can help you get more affordable housing on the market. And then what they've also happened as well is in the past couple of years, you've had the deed restricted properties, right? So providing an ability to develop more units, so long as some of these units were deed restricted, in which at least X percentage had to be held for affordable housing purposes, and that deed got recorded against the property, so that if a future buyer came in, they're also restricted under the same deed restriction. So there's a permanency of these affordable housing units, right? So this kind of follows what California's already been doing. It makes sense. If you buy a more than one unit property and you place a deed restriction on it, making sure that at least 15% of the units are going to be used for affordable housing purposes, and it records within 3 years of the sale or exchange, this law will not apply to you. However, just note that it's only going to apply to the first sale or exchange. So if you sell it to a subsequent owner, they end up selling the property within 7 years, they will get hit with this tax, even though it already had a deed restriction in place for them. Exception 2 makes sense as well. So really kind of you buy one parcel, you subdivide it out, also exempting the portions which have not been sold out. Similarly makes sense. The people that are creating housing stock, they're not trying to hammer them any further. The third one here is again, a somewhat nuanced one, but a good strength and also probably the biggest weakness in this bill. The goal of this is to promote and help people buy their first homes. As many of you already know, the institutional buy box right now is really that first-time home buyer home. That's what Pretium and Invitation Homes, that's what they're targeting, right? Because those also make very good homes to rent, as the market has already told us. And so what they're saying is, hey, look, this is the market that we're most concerned about is first-time home buyers. And so if you're a first-time home buyer and you're buying this property, this doesn't apply to you. Great. But that's not a corollary to who is an investor, right? Because I already own my own first home. Many of you own your own first home. So if I go buy my next home, right? If I upgrade or downgrade my home, well, guess what? When I sell my next home, I'm considered an investor at that point, even though I'm living in this property, even though it's my primary residence. It didn't matter whether I had to move jobs to Northern California or move somewhere else in the state just to live. Too bad, so sad, you're paying a tax because you're now considered in this bucket of investor under this law. So it only applies to the first home purchased, and that person has to reside in that property for all 7 years. They are exempted from this tax, but all other homeowners are not. And so this really isn't an investor tax, it's a homeowner tax. It's anybody in California is who this is going to apply to. Other exceptions. So for example, if it's actual commercial real estate, it's an office building, it's, you know, a warehouse, whatever you want to call it. However, even mixed use properties, if there is any residential component, it would apply to those assets as well. So it really has to be true only commercial use. And you've got units that have current existing units that already have housing deed restrictions in place for affordable housing. They would also be exempt. You know, dedicated spaces where, you know, you dedicate a park to a playground or a park or whatever, those sorts of things would remain in place. Properties that are otherwise exempt from transfer taxes, which, you know, is nothing, right? So it's a rare exception. So then who are the people it would apply to? We already kind of talked about this, but it's any individual, entity, it doesn't matter. It's either a corporate tax, you know, a corporate capital gain tax, or it might be your individual capital gain. Just depends on who owns the asset. The two only exceptions to this rule are the active duty military personnel, or if a person dies and a transfer occurs as part of the estate transfer. So it will not occur there as well. But again, your average homeowner who has bought their second home and chosen to sell or otherwise transfer that second home will get hit with this tax. And so really it applies to every homeowner in California is who it applies to. This is also another, what I would say is heavy flaw of the legislation, which was follow the money. And so in this situation, when you follow the money and where the money gets put into, at least 30% will get placed into an affordable housing fund with the purpose of creating affordable housing. I don't know whether that means they're going to start, you know, the county's going to start developing, whether they'll offer credits. They don't say. There's no actual methodology in here for what they will do with this money, other than create affordable housing. Erin has some great anecdotes about when municipalities have tried to create affordable housing and how effective they have been to date. Certain things government's very good for. What I've understood is building affordable housing hasn't been one of them to date. So yeah, there's that. And then, so, well, what about the other 70%, right? 20% to the school districts, which we love schools, but again, that doesn't create affordable housing, which is the purpose of your bill. 40% for transportation. I also love public transportation, but again, doesn't create affordable housing, doesn't lower housing costs. That was the purpose of this bill. And then 10% is to pay to the actual government to implement all of this. And here's another really interesting wrinkle when you think through how this legislation is written, is that these funds are, in terms of allocation, where does the money get spent, right? It's at the county level. Which county, right? It's at the county of the taxpayer. So, you know, many people who are the investors are not actually, you know, where they are buying the property is not where they live, as you may or may not know. And so really what you're probably doing is making some very nice neighborhoods have much better transportation. So we appreciate the intent here, but they're not spending the money where it needs to be spent in the first place, which is the property where that was actually sold, which actually probably needs more affordable housing. That's not where this is being spent. So that even that 30% is being spent in the wrong county and being allocated to the wrong place. So really unfortunate allocation of funds as well. So not a particularly great bill. When it would go into effect, it would go, if enacted, January 1st of 2023, next year, January 1. And then what's happening? So the bill was text was actually technically drafted in February sometime, but the way it worked, it came out as, I don't know if it was like an environmental bill or something like that, and which is oftentimes the practice. They take a bill, they completely gut it, they rewrite it, and they create a new bill. That's what happened here. So on March 8th, this bill came into was written, where it sits in the Revenue and Tax Committee, and it's Assemblymember Ward who has proposed the revisions to this bill. It is a tax measure, and California requires 2/3 of our legislators to pass a tax measure. In California, we have a Senate of 40 senators and 80 assembly members in the assembly. The current makeup, as you see on here, is we have 31 Democrats in the Senate. So we have more than 3/4 in the Senate, and we have 60 Democrats in the assembly, so we have exactly 3/4, which, you know, from a fractional math perspective means that they have the votes technically on the Democrat side. However, California we have a big D party. And so, you know, we have lots of what I would call business Democrats who often vote fiscally conservatively, even though they are socially liberal, right? It's probably a better way to describe it. We probably call them, you know, Mitt Romney Republicans in most other worlds, right? So that's probably what they look like. And so this is definitely no walk in the park as written, even with our current makeup. You need to lose, you know, at least 4 Democrats in the Senate and at least 6 Democrats in the Assembly, which is, you know, probably highly likely. And the very next step is it actually has to come up and be brought up in the Revenue and Tax Committee. I looked at the calendars, and nothing's coming up for the next few weeks here. So currently, it's not even being proposed, and oftentimes these sorts of bills die in committee. So that's our hope in this situation in the first place, is that this thing never sees the lights of day, never sees a further vote. It just sits in a committee, was an idea, and doesn't become much more than an idea. So we've already kind of identified, but let's just kind of encapsulate, like, why, you know, why such opposition. So first things first is, you know, we're not we want affordable housing, all of us do, and we really, and there's lots of ways to do this. And the beautiful thing is, many states have demonstrated this, right? That the number one issue with affordable housing is the cost to build the housing, right? That's not changed, and it's not going to change. And so until there are measures directed at making it cheaper to build homes, you're not going to make a house more affordable. So you're dealing with systemic issues altogether. So one is this bill, as you already identified, is there is nothing in it to create affordable housing. There's no, you know, other than create a 30% pool of funds to allocate towards it, there's nothing in it to actually create an affordable house or to reduce the price of houses whatsoever. In fact, it will make it worse, because what will happen is when I go buy my next home, I'm not going to leave that home, right? I have a pretty strong disincentive to not take the job in Northern California, not leave the state, not otherwise be mobile and place my house for sale, because I don't want to pay 25% taxes on that sale. Makes no sense either. So it will actually reduce the housing inventory, which is really one of the biggest issues we have here. That's also what was California Association of Realtors' primary argument back, which was, by the way, we don't have inventory. This hampers inventory. That's the problem you have here. We already talked, 30% of the funds is all that's allocated, and it's going to the wrong place in the first place. And it's targeting the wrong people. If you wanted to have a housing speculation bill, I don't think people like you and I who are buying our next house to live in, I don't think we're speculators, right? And so pretty wide net being cast at the audience. So that's the, you know, that's, and you'll see we've written a lot of letters and collateral, and we'll talk about that in a second here, kind of what can you do, which all kind of identify, these are the problems, right? And we'd love to have a conversation with Assemblymember Ward about ways to promote it, you know, and I think, you know, I'm not the expert in that. I'd love to send Aaron down there and say, look, let me, as someone who builds properties and knows how to build properties and knows how to create affordable housing, let me tell you what's working, right? Here's some great suggestions. So it's not just no, it's no, and here's what else we can do, right? There's some real tangible ways to do this together. So, you know, what can you do? You know, right now is you know, I doubt you need to talk to your Republican legislators. I suspect we know where they're going to fall on this bill. If you have one, you can make them aware of it, but, you know, not particularly the odds. We need some defections here from the Democratic side, spreading the word. You know, it's interesting. This has been one of those issues. You know, I've been involved in a good number of mobilization efforts, and normally they just affect private lenders because by way of profession, that's generally the demographic I'm representing. And so those are the pieces of legislation I'm generally tracking. So I was interested in the ADU stuff, but, you know, it was more of just my general interest as a person that likes real estate versus something that was very tangible to my client base. But the interesting thing is, despite the wide net of this thing, there actually hasn't been a lot of pickup of this issue. I've seen, and it's really weird because there's actually a lot of news sources picking this up, ABC4 and all these sorts of things. But I think because this thing is called the Speculation Act, it's talking about investors, that people don't realize it just actually affects every homeowner. And I think that's probably the disconnect. And so really trying to get the word out that this isn't about private lenders. It's not about real estate investors. It's, yes, you're also picked up in this dragnet as well, right? And for private lenders, the downstream effect. But in reality, this is bad for California residents. That's who it's bad for. So it really needs to get more attention, and the louder that contact base becomes, the less likely this comes into play. And then also too is even, let's just say they fixed the investor argument, right? Let's just say hey, we're going to make sure that if it's your primary residence and you live in the property, then we're going to exempt that property altogether, right? As long as it remains your primary residence, they get rid of the whole silly first-time home buyer aspect of it. It's also misguided, right? Because let's just play this out let's just say they fix that and it's just for real estate investors. It's great. You're a real estate investor and you sell the property in the next 7 years. What are you going to do, right? And you all know the answer to this, right? Okay, well, I guess I'm not going to flip the property. I'm going to hold it. I'm going to turn it into a rental, right? And I'm going to go get a loan on it, and I'm going to just do the cash play until I can make this thing play itself out, right? There's other strategies that can be employed here, right? It's not going to really stop the activity. What it's going to do is it's going to stop the inventory, right? You're going to fix the property. You're going to flip the property, right? You were going to take something that wasn't livable, right? May have not a COO or really needed a lot of work done to it, and you were going to turn it into a unit that someone could actually live in, and probably raise the property values of the neighborhood, make it a beautiful property to live in, really, add value to the whole thing, and you won't, right? So what this really does is it effectively probably creates more rental properties altogether, right? And that's not necessarily a good thing, right? We don't really, while we need units, period, more rental units isn't necessarily the solution to this problem, right? Particularly when you're talking about first-time home buyers trying to buy a property. So, the good thing on this one is thankfully that they actually kind of did a wide sweep on this one. Normally you don't see this sort of roster of people working together. California Mortgage Bankers Association oftentimes is more fixated on call it the commercial multifamily world, right? So, but this attaches multifamily just as much as it does single family. California Mortgage Association and American Association of Private Lenders are obviously mortgage lending associations, clear interest, although tangential, right? I mean, we make loans to the people who are in this business. So we make loans to real estate investors. Think Realty is obviously there on the real estate investor side. California Association of Realtors is really, thankfully in this fight with us as well. And they have, as you know, an outsized voice in California. And so, they're up in arms over this thing, as they should be. And so we've got a lot of positive momentum. And in terms of what's happening in real time is we just signed off. We actually just started pushing this on socials today. California Association of Realtors, along with these organizations and a lot of other organizations, just submitted their official letter over to Assemblymember Ward and all the members of the Revenue and Tax Committee. And this was not a, recommendation letter of like, hey, here's the ways to fix it. It was, this is misguided. This thing needs to stop. And just, we don't want to see a new and novel version of this. We want you to end this immediately. So that was a letter that was being sent out. And that's the status quo currently as it sits. So that's great that we've got kind of that mobility happening. But again, it's primarily what I would say is a lobbyist-driven game right now. So you're seeing, California Mortgage Association, California Mortgage Bankers Association, they have lobbyists, they're talking. That's great. Lobbyists have definitely a voice, but not the compelling one, because I'm assuming, because who else has a voice is the people in Assemblymember Ward's jurisdiction who are saying is bring down these house prices, help me, right? So there's plenty of voices out there. And so just, I think that people give more credit than credit's due, particularly in defeating legislation. Lobbyists, I think, are very good at helping craft legislation because they bring a voice into the room of saying, hey, yeah, this works, but this, but, here's some minor tweaks. They're really good at hacking away at legislation and making it make sense for that trade organization. And they do a really good job and oftentimes help fill in the gaps when you're creating legislation. But when you've got trying to defeat legislation, lobbyists are generally not the right tool in that toolkit. It is advocacy and mobilization and phone calls and letters. That moves that needle a lot. So we'll talk here in a second too about what you can actually do. So, and this will actually kind of be our last slide here before we hit questions, which is we've got a website up, and I think Aaron already kind of probably dropped it in various links here. So here's what you can find on that website, which is very helpful. There are 3 different letters that you can just download. And Aaron, thank you, because Aaron helped draft the real estate investor letter. And so if you go to this website, you can find one written from a private lender. So if any of you are listening on here and you're ever a trustee beneficiary on any loans, you can write one directly on that behalf and explaining the role that private lenders have in this. We give loans to real estate investors, and real estate investors help stop this bill. Real estate investors are out there creating housing inventory. We have one from the real estate investor standpoint as well. I'm a real estate investor. Here's what I do. I employ this number of people on an average job. I develop in these areas. What is the role you're doing? How are you solving the problem realistically, not someone that should be taxed? And then lastly is what I call the dragnet, is you're a homeowner, right? I'm a homeowner and I want to buy property and I want to be able to move, right? I can't move because of this. This is crazy. And if you're trying to create inventory, well, here's a great way to do it, is lock up every person in their home for 7 years. That's a great way to create inventory. So, that's those are a few different ways to do it. And then lastly is anyone listening in San Diego or have a connection into Assemblymember Ward's office, we would love to just put together, a real meaningful discussion, and not you don't know what you're talking about kind of thing, but like help us understand the problem you're trying to tackle. Have you thought about this issue this way? Do you what do you think about that second homeowner who's trying to buy? Give me your understanding of what real estate investors are doing. Are all real estate investors the same, right? Do you think Blackstone is the same as the guy who's flipped 5 projects in this last year? Because under this legislation, they are, right? Treated the exact same, right? You're going to treat these 2 parties the same way. So really trying to get a good a dialogue going there as well. So, but the biggest thing you can do is take this, share it, on your own social media and your own RIAs, all this sort of stuff, is get that out there. We've tried to provide as much collateral to make it as easy as possible. So if you go to the website here, there's the letters there, there's the contact information for the assembly members that are on the Revenue and Tax Committee. You just got to pop in addresses of your address, their address, fill in some blanks, and you're off. Better yet, if you want to give them a phone call, it's 10 times better than that letter in the first place. So, put your voice in there, and spread the word. There's nothing more that you can do. And if you do that, I'm telling you, that is much, much more important than anything else.
Very cool. I really appreciate that. And I'm going to take over a little bit, and I'm going to give you a little bit of nuance on how to play this. If you've ever taken an improv class, there's a rule in improv. It's yes, and. You never say no on stage because it shuts the other person down. I'm going to slightly tweak that. It's going to be no, but. And what I want you guys to do is really focus on SB9. SB9 is where we're able to do lot splits in California, or we're able to basically turn a single family residence, a R1 lot, into 4 units under current ADU laws. I think there's a significant opportunity to separate ourselves from Wall Street. But I want you to understand the data that a lot of these legislators are looking at. And I told Adam Data this 2 years ago. They haven't listened. I emailed them again today. I emailed Oscar and Jordan again today at the California Association of Realtors, telling them, I don't know anybody who's separating iBuyers from the data. And let me walk you through what they're doing wrong. They're not meaning to. It's just been this way. And so anyway, Adam Data puts out something called the Home Flipper Report. Probably a lot of you are signed up for it. They define a home flipper by somebody who, non-owner occupant who buys and sells something within 12 months. Here's the problem with that. iBuyers in California, especially last year, decided to completely switch gears. They're not renovating homes for the most part. What they're doing is they're buying a house that needs very little work. You'll notice in most areas, it's houses that are post 1980, very similar, square footage, bedroom, bathroom. And you're lucky these days if you get new paint. What's really interesting is before the webinar I did with Nema, I found Zillow said on average they spent around $5,500. I can't find it now. I wonder if they updated the investor letter, but I'll find it again. Open Door is not sharing that information on average, how much they spend, but these guys are not flippers. And here's the problem with that. Atom Data is actually picking them up as flippers, which is not good because they're not. They don't add value. What they're adding is transactional speed. They're not doing what investors do. They don't do the ugly ones. They're doing the easy ones, which means very little work on the inside, very little repairs, and they don't want to deal with people problems. If you use Property Radar, I want you to do something very specific. In Property Radar, you can actually select location. I would go to the county level. There's a quick list within Property Radar where you can say, hey, I want to look at flippers. And there's this really cool way in Property Radar that actually defines market flip, short sale flip, and REO flip. Unfortunately, Property Radar also says, hey, look, they're only looking at 6 months. And the reason is Property Radar said, hey, if you can't flip a house in 6 months, you must be terrible. And, you know, once upon a time, that was really true. The problem is lately we have more ADUs being built, and we also have supply chain disruption. But I want you to see, I pulled this list all over California. Hopefully you can't see that. I'll move that. Hopefully you can see my screen. I want you to show over here is the purchase seller and who bought them. I'm just going to scroll through really quick so you can see Zillow purchases, who it went to. And I want you to try to spot entities if they're flipping directly to entities. I see people. Okay, I see one entity, but for the most part, all the stuff that they bought last year, the vast majority is going to owner occupants. So these guys, Zillow in particular, in this case, is being shown up as a flipper when 90% of the time it's going to an owner occupant eventually. Very quickly, within typically 60 to 90 days, they're putting new paint, a really good vacuum job, and they're putting it back on the market to be sold to an owner occupant. Why? Because they're making money on every piece of their transaction, loan, closings, you name it, okay? Another point of if you need fodder for how terrible government is at creating affordable housing. This is, I want you to notice the address, lamayor.org, and under summary of a HHH pipeline. HHH was a $1.2 billion tax that they implemented in 2016. The goal was for them to create 10,000 affordable units, but I want you to look right here. I can't select it, but it says the average total development cost per unit, almost $600,000. You're not reading that incorrectly. I think there's been a little over 1,000 units in 5 years that have been implemented. And the Turner School has put out some data on 2018 and 2019. ADUs are crushing this, absolutely crushing this. And it's led by owner occupants. So if you need an example of a Southern California government that is doing a terrible job of creating affordable housing, all you have to do is look at the summary of the HHH fund, and the government is actually giving you the data to show them how bad they're doing. It's hard. It's not easy to do. In the chat, and I'll post it on our website as well. I'll post this one because this has the 3 different letters. This was what he was talking about, the sample letter for real estate. You'll see the Nema has a webinar here. You'll of course have access to this one. And this is the one that I participated in last week, just talking about all the data. Darren Bloomquist is on there from auction.com as well. But I wanted you to get a sense of some of where they're pulling the data from. This is not ill-meaning. They don't mean to be terrible. They just are. They're just not understanding Main Street from Wall Street. If you can do me a favor, provide data to your local market. Lead with data. Data is not emotional. It's just data. And then I want you to if you flip houses, provide pictures. Show them before and after if possible. Because some of you guys do hoarder homes, you're adding accessory dwelling units, and guess what? They have to meet their RHNA numbers. If you're not familiar with RHNA numbers, last year in October, every city within the state of California got their allotment of affordable housing numbers that they have to build in the next 8 years. Talking to local development professionals, they have to build, if they were to do it alone, at rates that they've only accomplished once for the next 8 years. They cannot do it without the private sector. And right now, SB 9, which went into effect in January, is not available for investors. SB 10 is, however, it gives the city an option. SB 9 is where you're able to basically turn a single family lot into 4. SB 10 is where you're able to turn like an R1 lot and the city designates where they want them, but you're able to create a 10-plex plus 2 ADUs and 2 JADUs for a total of 14. So it's where they want density, but not all cities are going to play ball. So if they really want affordable housing, they would give the private sector access to that. we have the skill, we have access to private capital like hard money lenders, like the Norris Group, and we know what we're doing. We can get these done. They don't have to do this. We can help. So with that, I'm going to start. Let's, if you have questions, go ahead and put them in the chat for me. The first question is investors into opportunity zones designated areas not exempt. I'll take this. You only get the full benefit of opportunity zones if you hold it for 10 years. So no, it falls outside the guidelines. If you sell it early, you would. Nema, are you thinking the same thing?
Yeah, that's correct. I mean, and the other answer too is it's not exempt otherwise, right? So there's not a special exemption for opportunity zones.
Would a nonprofit be exempt?
That's an interesting question, right? I assume as much because can they? That's a great question. I don't know because individuals, it's a tax. You know, this is my lack of knowledge of nonprofits. Like, what do nonprofits file taxes? I'm sure they do, right? Like, and so like.
They do. They might be exempt entities. And the only reason I bring it up is because of SB 1079. If you're not familiar with California, SB 1079 is where California used really bad data to implement if you're buying at auction, somebody can raise their hand, a government entity, owner occupant, or a nonprofit can raise their hand within 15 days and buy it for you for $1 more. The dirty facts are there's some very big companies that open a nonprofit.
Oh, yeah.
And they're pushing the small guy out. So the very thing that they tried to stop, and again, it wasn't ill-meaning, they even talked to legislators trying to get them to understand the data. It's terrible. Can I buy in an entity and sell the entity and not the property?
Yeah, so the technical answer is no, because it's sale or transfer. Right. And so I think that if you were to talk to the franchise tax board in this issue, well, no, you transfer the property, right? Regardless of whether you sold it in that instance. And obviously it's very hard to track in that situation. So, it's ultimately a question of whether the taxing authority was able to pierce through and understand whether a transfer actually occurred. If they were able to do that, then yes, it would qualify at that point of the transfer. But again, it depends on how disciplined the taxing authorities are going to be in that situation.
And the truth of the matter is, from what I've seen, you have to take things out of entities. The state of California has been really picky about wanting the underlying people's name. I've seen that quite a bit. So I knew it was going to come up, so I decided to ask it now.
Fair enough.
And they're keeping track of this by, you have to file the affidavit or something to say that you're going to live in it, right? That's how they're going to keep track of it somehow?
Yeah, my assumption is that upon sale, there's a form, and the form says I've lived in this property. I have to attest that you've lived in the property for the preceding 7 years, or what. My first property that I ever purchased, and it's done through attestation on some sort of government form.
Okay. Mark is asking, how likely is the bill author to amend the bill by exempting owner occupants to make the legislation more appealing to the general public?
Never say never, because I guess anything can happen with legislation. I can't imagine a world in which it passes as is, right? It's just too wide. It's without exempting owner occupants as a general rule. I can't imagine a world in which this actually moves forward. But that is a really great question. What if you fix that, right? What if because now it's just the boogeyman of real estate investors, all that's left over, and it's a much less sympathetic audience. And so the good thing is, at least from a coalition perspective, is no one is asking for amendments right now. No one is saying this is, I get this legislation, it makes sense, but it could use a little bit of finessing. The current position is this makes no sense.
I'm trying to think of amendments we can promote. Like, okay, maybe 10% of the sales price has to be put into repairs into the property to account. To your point, what is an investor? I don't consider iBuyers at this point an investor, because they're not putting money back into the property. I don't know. We're not funding any loans, as an example, where the investor is only putting in $5,000. A good vacuum job and some new poles on some cabinets.
I mean, this is the interesting for a state that's actually been on the right path, or on a better path recently, right? I mean, we've seen this tension. I mean, this happened in New York recently, right? They tried to do the exact same thing, this flip tax. I mean, states are terrible copycats one another. It died in New York. It did not move, which is great, and hopefully it doesn't do anything here either. But and similarly, as I was there, ancillary stories. I was in Florida for what was effectively a mortgage lender licensing issue, but the crux of it and the reason why we became knowledgeable is they were passing it for their affordable housing legislation. But if you went to Florida, what they did there was brilliant. They basically says, I don't care about the county's rules related to the permitting process. The state is going to mandate to the counties the maximum time period you have to either deny the permit or to offer amendments. And they took the control out of the county's hands, right? And so that sounds like a great idea. You know what I mean? Like there's many things we could do, and so you could do a tax credit. There's lots of things that would actually, if the goal is more housing and more affordable housing, there are other ways to get there, right? Generally speaking, the government spending money doesn't do it, right? That's, as you've already demonstrated. The few case examples we have and California has money. We have, whatever it is right now, $40 billion surplus. We got plenty of money to try to build houses. But no one's trying to build houses. That's not what the government is good at doing, right?
They could have turned that HHH fund into like a credit line for ADUs for owner occupants. I don't care. They could have made money.
You want to build affordable housing, and we'll give you a 1% line on it. There's a lot of ways to do. You know what I mean? Like, yeah, give them a reason to build it. Give them a reason to build it, right? That's what they're looking for.
Yeah, I just think it's such a huge opportunity for investors to say no against this one, but to bring up SB9 and to make it more affordable. And you can't take anything for granted. This stuff, if we don't say anything, if we don't educate our legislators, it can go through. And I think for the most part, data is a very non-emotional way to do it and a great way to do it. And it's visual too. If you arm them with the data and visuals, you're doing their job for them. Nobody else is going to come up with that. And I've already shown you the data that they're likely pulling from. I did check with Darren. He used to work for Adam Data. I emailed Rick Sharga as well. I'm like, is this still how you're doing it? But I just showed you on Adam Data what they're considering a flip. So we know that's typically the most quoted data source when it comes to investors. I'll see what the CAR comes back with, because they might be looking at only all cash deals. But even iBuyers have a huge line of credit. So I don't know how they're separating that. But the problem with including iBuyers too is it messes up the average profit and it messes up the holding times big time. So investors, if they're taking over a certain amount of time, they're not showing up on the list. iBuyers will more often, which is just a shame. And unfortunately, Zillow just announced that they sent 2,000 properties to Pretium when they closed shop, when they were closing down the Zillow offers. 2,000 went to them. And this drives me nuts. So the way that the national media covers this, and the iBuyers almost seem more than happy to let them do it, as they're like, oh, we're only 2% of the market. No, you're not in every market, and you're not in every buy box. You're in, I think, Open Doors in 41 markets at this point, but they're in a very particular buying arena, FHA and under for the most part. So when they're buying that, those are houses that millennials will never get a chance to own. So we're blocking a very specific category of buyers out of home ownership, which is not great. So, and builders are not building for the most part in that range because it's not as profitable. Yeah. So anyway, any other questions for Nema about this? I'm trying to think of if there's any questions I haven't thought of that keep coming up.
Aaron, can I ask a question?
Sure.
So what is the goal of what we're doing today? Activating them to do what? Is it really to, be at the table of affordable housing, or is just, hey, let's find a way to kill this bill because it's just going to hurt everybody? Because if they were really serious about affordable housing, they would do a lot of things about, the barriers to, make things pencil, right? So what are we asking, the people on this call, people who are going to listen to the radio, what is it truly that we want to happen?
I would love to see more investors in general be activated. I mean, not all investors, especially mom and pop, belong to a local, they don't belong to CAR. Maybe they don't have a license. Maybe they're not a private lender, so they don't belong to the California Mortgage Association. Maybe they don't belong to the Builder Association because they're not doing enough volume. The truth is these organizations take a lot of the heat and they spend a lot of money educating our legislators, but we can do that too. We don't have to be a member of anything. We just have to know it matters, and we have to show up. When you're not at the table, you're on the table. And this definitely affects you. And at the same time, your legislators should start to learn to trust you as the local expert. They should, why not show off your work? Show that hoarder house, the worst house in the neighborhood, you turned around into something wonderful, and let them know, hey, you're interested in building and to play ball with SB9. You just, right now, you don't have the opportunity because it does not include you. SB9, by the way, it doesn't mean the state has set the guidelines, but it doesn't mean that localities can't play ball and make exemptions for you. So the state is one that sets the bar, but the localities are the ones that are deciding which rules play for you.
Yeah. And if I could jump on that too, I mean, it's an astute point, which is that the legislators are expecting the trade associations to get involved, and that's great. And they have a voice, and particularly they have a great data voice, right? Is hey, let me help you, let me just educate you, and that's really the primary role of the trade associations. Good intentions, but let me educate you on results, and that's fine. There's a role to play. When we were in Florida and an issue came up for mortgage lender licensing, you would think that the person that should be speaking was the mortgage lender. Not at all. We had the local RIA show up, and the local RIA showed up, and the guys were showing up saying, look, I cannot obtain bank financing. It does not exist for this asset, right? So you're putting me and my crew out of work. That's what you're going to do. That's what you're going to do. So you think you're harming what you think is this predatory lender? That predatory lender is the only guy who's going to give me a loan, right? And it was just this light bulb that occurred in front of them, because this was happening in the committee, and they were standing up there one-on-one explaining their personal experience. And you just saw it finally click, going, oh, like that's who's being hurt. And I think that's what you're really seeing in this situation as well, which is a real estate investor is just this thought in their head of what that person is, right? It's this greedy landlord who's kicking out tenants all day, right? That's the one thing, that's all they know about you, is you're kicking out tenants, right? And trying to get, and it's dispelling that myth, right? And I think that the more that it's just, oh, I now get because remember, one day health insurance, the next day real estate, the next day, whatever the issue of the day is, that's what they're talking about. And so if you can help them understand, because they don't understand real estate at all.
Yeah,
they did, they wouldn't have proposed this. That's what we're saying. So if you can actually help and explain the role of the real estate investor and how this actually benefits, your voice is much more compelling than the trade association.
I'm part of something, an affordable housing coalition that's going through the Council of Governments put together SCAG. And I believe in Southern California, it's everybody but San Diego. So there's a course that 40 of us out of 400 were selected to go through this course. I'm one of 2 private sector individuals. And last Monday, we had our session and they brought up this issue. And I'm like, guys, I'm going to tell you now, I'm going to beat you guys up. The data is wrong. This is how wrong. And she shared a Washington Post article. Washington Post did not source their data. I don't know where they're pulling from, but I bet you anything I know where they did. And if so, this is how we're doing it. They're doing it, and here's why it's wrong. And they had never heard that before. I was like, when is the last time, as an example, in Riverside, I pulled this data because I was part of another housing coalition, because I'm a nerd out here. And I was like, okay, when's the last time you've talked to landlords about what you want, about what's possible? And they're like, well, we haven't. Exactly. They already own inventory. Have you told them that you want ADUs? Have you talked to landlords with lots over 10,000 square feet that could clearly fit an ADU? Of course you haven't. I think the average circulation of the press enterprise is something around 100,000. We're not like Palm Springs or San Diego or LA. We're a secondary media market. We don't matter, I guess. The problem is that the majority of landlords, a huge portion of landlords live out of the county. So they're not paying attention. So unless you mail them something, or they happen to be a subscriber to the Orange County Register or the Press Enterprise, they're never going to hear it. Yeah. So who would you also start letting them know? Like, you're already creating this letter, a sample of your work, some pictures. Who else would you send it to that you think would be impactful in government?
Here's what I would say is the interesting thing is I hate what I do, meaning I hate my job primarily is reacting to legislation.
True.
Right? That's really it. And it's the most annoying thing, because it's like it's a fire drill every time, and you're fighting, and it's so hard to do well, right? And that's awesome. I saw, in the chat box here is one of the people on here, right? Like, I think the challenging thing is so many people can be very political in their approach to this. It's not a politics issue at all. Like you truly, I truly believe Assemblymember Ward is doing the right thing in his own eyes. I don't think that's ounce of ill will here.
Agreed.
I think he was elected to try to help people, and he thinks he's helping people. That's it. And so it's really getting more involved in general with local politics, right? As silly as it seems, like this is what happens when you're in a vacuum and no one knows. Like this is the stuff that comes out of it. And so I think it's, even if you're not an assembly member of a ward district, it's having a conversation like, hey, like I just want to express myself. Like I've noticed that there's I think California's got a really big housing affordability problem. What are your thoughts? Right? Like I'd love to talk to you about it because I'm in real estate and I would love to give you some ideas and like some things that California's done really well. And I think there's some things that might be able to help you a little bit. Any sort of connection at that level really will. The big picture of this thing is what is what's another SB 9 that we could do? What are improvements that we can do? What are maybe tax credits or other things we could do that would actually generate real inventory and help? Right? That's what I'd love to see. Right.
Yeah. And they're motivated. They need to, I didn't explain this. What happens if they don't meet their RENA numbers in the next 8 years? If the state can take over, which has never happened before, but the state can take over planning departments and just say, you're not getting it done, so we're going to do it for you. And then you lose complete local control. But they also lose access to funding for transportation, CBDG funds, which go to nonprofits that help a lot of support, local projects, affordable housing projects. You don't want to lose that money. So they're motivated to work with you, but we need each other to really show up. Some of the places that I think to show up every once in a while, you can show up at council meetings at the local level,
yes,
and share your ideas. You can show up at the local chamber and start to get known as, let people know what you do. You don't have to show up all the time.
Yeah.
If you're in an area that's county driven, and a lot of money lands at the county, so show up at your county version of council meetings and let them know what you're doing for affordable housing and building ADUs. And it never hurts to show up and tell them about timelines, like let them know how they're doing when it comes to build permits or turnaround time. With under ADU law, they're supposed to be hitting a 60-day maximum timeline or it's considered approved. I don't necessarily go for that strategy. They can make your life very difficult. Don't want to play ball that way. But that's definitely something. My council member asked me last year, like, what do I tell my constituents about ADUs? I'm all, it's out of your control. You don't have any say so, and the state regulated it, and sorry.
Well, I mean, Aaron, you've led the fight on calling YIMBY, right? Like there's truly like a philosophical shift that kind of needs to happen here, right? Like that's the real challenge we're ultimately facing here. I live in Mission Viejo, and like I'm getting flyers right now because they're like, oh my God, they're planning on developing some, real estate in this dilapidated like shopping center that is just, an eyesore, candidly. And I'm like, guys, like there are giant, for the love of God, let someone move here. This is crazy. This is crazy. This cannot be forever. We have to, at some point, recognize that people should be able to live in this place. And if you don't, you're not going to be able to either, right? Like this is going to be a weird place if we continue to let status quo occur. It already is.
Aaron, somebody asked what would Assembly Member Ward's district is. It's coastal San Diego from Solano Beach to Mexico, and including parts of downtown.
Yeah, and San Diego is one of the most cutting edge. I didn't create YIMBY, by the way. There's a whole club of yes in my backyarders, but there's a big movement around ADUs, and I think we should really be pushing SB 9 because it's such a creative way to get more inventory.
Yeah.
But anyway, any other questions for Nema while we got him on the phone? I know I've run out my clock and I'm not paying for your time. I feel so bad being an attorney. And I just want to thank you for your time too.
Yeah,
I know you've worked so hard, and I don't think people know some of the things that you've helped stop, including NMLS rules in Florida. I got my NMLS license thinking that you were going to have to in Florida, or you couldn't do hard money out there. You were instrumental in getting that stopped. So it's everyday folks leading with data, leading with visuals, understanding what you do, and you become the trusted expert, and that's how you play the game. And I don't think any of this is ill meaning. It's just, you've got an intern that pulls bad data. When it came to SB 1079, the one with the trustee sale, the redemption period, they were comparing California to, I forgot if it was Detroit or it was some city that was losing population for the past 50 years. And they used their TARP money to tear down houses. California really has never done that. And as of 2 years ago, they were still spending some of that money tearing down houses. So it was completely inappropriate. But unless they have somebody that they trust that's presenting that data, they're going to go with the intern. So when you're not at the table, you're on the table. Nema, where can people find out more about you and the law firm?
Sure, I appreciate that. I'm on LinkedIn probably primarily from a social media perspective, and so you can look at my name. That's the easiest way to probably grab a hold of me there. Alternatively, we've got our website. We've got Geraci on my name here, so it's GeraciLLP.com. I work at GeraciLawFirm.com. Would be happy to chat with anybody after the fact. Particularly for people that want to get mobilized. I mean, that's really good ways to get plugged in. I'd love to be a part of it. Any person, like I said, if you have an ability to get a meeting with Assembly Member Ward, I'd love to get a group of people going down for that. That is winning heart and mind is the ultimate battle. And if we can do that, then you've really helped out a lot of people.
There are a lot of people on this call that were from the San Diego market. So if you need to connect, I will definitely, I'll have them reach out, but let me know.
Thank you.
Nema, really appreciate it. Thank you so much for joining us.
Take care, Aaron.
Okay, bye-bye.
Bye.
Bye, everybody.